Get ready to take a flamethrower to the official narrative and learn what the elites don't want you to know. You're listening to The Tom Woods Show.
Hey everybody, Tom Woods here. It's episode 2609 of The Tom Woods Show, and our great friend Lawrence Lepard is with us today. He is a sound money fund manager. I don't know if I'm allowed to say that. Can I say that I have some money in your fund? Why not?
If you like, sure.
Well, still a free country.
Not investment advice, everybody.
This is not investment advice, okay? Because there is a certain federal agency that thinks you're a complete idiot and that you'll think that everything we say, we're telling you, you have to go do this. We're not. Okay. You do what you want to do using your own knowledge and your own instincts. But anyway, I want to talk to Larry today about his brand new book, The Big Print: What Happened to America and How Sound Money Will Fix It. You folks who say to yourselves, oh, I've never heard of this Larry Lepard fellow before. Well, maybe you have. First, Larry was actually a guest on the Tom Woods Show when I was sick in the hospital a few years ago. And we had a guest host on. We brought Larry on. So he bailed me out at that time. Now Woods is out of the hospital more robust than ever. But awesome. The other thing that you might remember him for is back in the 2008 Ron Paul GOP presidential campaign, there was a man, a great benefactor, who paid for full-page ads in a major U.S. newspaper or newspapers on behalf of Ron Paul. It was like an open letter from the founding fathers. And he did that with his own money because he believed in the cause. That's the kind of person we're talking to here. So I'm really glad to be back here in person.
Yeah, that was a long time ago.
Long time.
The ads are in the back of the book, and you can still see them if you like.
Good.
It was just too bad that Dr. Paul didn't get more traction. You know, we all tried really hard. I know you did too.
Yeah, that's true. But yet, in a way, he's, in a little bit of a way here and there, kind of getting his due. I think a lot of people.
Absolutely. I mean, everyone's beginning to realize how right he has been for so many years. And it's nice that it's happening while he's still around to enjoy it. He's almost 90 now, so.
Yeah. And the thing is, though, it's funny. He's very different from you and me. I think he could have very happily gone through his life with no vindication at all, just knowing he had done the right thing. But the rest of us mere mortals like to be told, oh, you know what? We should have listened to you the first time.
Yeah, no, we like to say I told you so. But you're right. I mean, he just did it because he believes. And that's what's so wonderful about him. I mean, I've never really seen a politician that's as pure as he is.
Yeah.
You trust his motives. And that's very hard to find in almost every other politician.
Let me take just a second to let everybody know that he's actually putting on a conference next month, March 2025, and I'm going to be speaking at it, so I just want everybody to know, ronpaulinstitute.org. There are several really good speakers going to be there, including Dr. Paul himself. So it'll be in Lake Jackson, Texas, which is his town. So ronpaulinstitute.org, you can find out details about that. All right, so let's talk about your book. You're telling a story that whose basic contours are going to be familiar to this audience. The basic contours have to do with the destruction of the money and how that is at the root of so much that's wrong right now. And so that you've got to get the money. In fact, you've had kind of a slogan for a while, right? Fix the money, fix the world.
Fix the money, fix the world. Yeah, a lot of us have picked it up. I'm not sure I originated it. I think I got it from Marty Bent. But yeah, it's become kind of a Bitcoiner slogan because as the book talks about, Tom, I mean, and what led me to write the book was I was watching a red-blue debate. I hate them all. And I thought to myself, these people aren't even talking about the major issue. And it's like they're arguing over the color of the draperies when, the house is on fire. And it's on fire because of the monetary system. And so I, having been a monetary system guy for my whole career, professional investor, that somebody's got to explain this and explain it in a fun enough way that it'll be readable, because there've been some people who've explained it like, Saif and Lynn have written some really great books on monetary economics, but a lot of people bogged down in those books. And so I decided to tell a story that would make it easier for people to see just how badly they're being screwed, how it happened, why it happened, and then more importantly, how we can fix it. What the optimistic side of the story is that, we can make things a lot better, and we're going there. So there's real upside here, but, meanwhile, we got to navigate this broken monetary system that's, it's going to be a tough navigation.
Well, what would be, as I say, because you are dealing in our case with an audience that knows the basic story, if you had to give a few minute précis of how we got to where we are, what would that consist of?
Well, look, since the beginning of time, mankind has wanted to fool with money. I mean, the Bible talked about honest weights and measures. I mean, and controlling the monetary system of any organization or society, gives great benefit to those who have that control. They can game it in their favor. And the Constitution, the founding fathers knew this. That's why they said only gold and silver, money that was, basically created by God and was in the earth's surface could be money. And slowly but surely, and admittedly in the early years, quite slowly, we went away from that. They suspended specie payments to pay for the War of 1812. And, then the greenbacks came along and Lincoln used those to pay for the Civil War. And of course, then the big one, the Fed got established in 1913. That gave a backstop to the banks so they could create a ton of money by levering themselves up. And of course, the taxpayer had to pay for it. And Roosevelt grabbed all the gold in 93. And then like the biggest one, the one that really put us into what I now consider to be, quote unquote, Tom, the end game, was 71 when Nixon went off the gold exchange standard. Now, U.S. citizens couldn't even own gold at the time, but at least there was some sense of monetary balance worldwide when gold underpinned the dollar, which it kind of did until 71. And we went off of that, and there's a great chart. One of my favorite charts in the book is a chart that just shows how inflation just kind of went straight up right after 1971. And so and then with each step, it's gotten worse. I mean, Greenspan decided that the stock market was a metric he wanted to manage, so he started printing money or lowering rates to manage the stock market. And the Federal Reserve, I mean, the commodities laws got changed, and the Federal Reserve, kind of continually, has been too loose and has cut rates. And it got to the point where it was almost really absurd when, 2008, this financial war criminal, in my opinion, Ben Bernanke, basically said, we're taking interest rates down to zero, which is a tautology. I mean, if capital has no return, then it has no value, which of course fiat has no value. And so, that combined with QE, which is, money printing on a massive scale, created an asset bubble, and that led to the next one. And, the book is titled The Big Print because I think there's another one coming. We've already had two real big ones. COVID was a huge one, and then before that, 2008 was a huge one. And the bottom, in a quick synthesis, Tom, the system is set up to protect the bankers, to protect the elite, to protect those who don't have to play by the rules and who know how to benefit from inflation. And they do that at the expense of all the average people who are wage earners who cannot play that game. I mean, your Wall Street, you get to borrow at the Fed funds rate, which at some points is zero. You're Tom or Larry, and you got to go to your credit card company, and they're going to charge you 25%. I mean, this is not a fair game in any sense of the word. And so, what the book really does, it's in two parts. Part one is the problem, how we got here, and each little step was incremental, right? You can't say, well, this one alone did it, but it's gotten worse with each set of steps. And that's why, a fact of the book that when I looked at this and did the research, it blew my mind. The top 1% of this country controls 92% of the wealth. Isn't that amazing? And the bottom, 50% controls less than 10% of the wealth. It's horrific. The wealth imbalance. And, I know I'm rambling out here. I'll stop in a minute, but the way, they've got so much to say. The wealth imbalance is also what drove me to write it. I mean, at 67 years old, I remember America in the 60s and 70s and early 80s. And I remember how much more vibrant and happy and fair the place seemed. And now the whole thing seems like just one big money grab. And, the middle class has been eviscerated, and salary and wage earners have been eviscerated. PE has ruined tons and tons of industries. People's pensions have been taken away from them. I mean, the unfairness in our system is so glaring. And the tragedy of that is that a lot of young people think, well, capitalism is broken. We need to be progressives or socialists. And that's not the problem. We don't really have capitalism. We've got crony capitalism. And so capitalism works fine when the rules are fair, but the rules aren't fair. So I'll stop there. That's kind of the big picture overview.
Well, what if people were to say, look, for the most part, the post-war, and we're talking about World War II, post-war America was actually a pretty, good place to live, and had a rising standard of living, and, consistent economic growth and all that, with some price inflation here and there. Now, you could say some of that was before Nixon closed the gold window, but, all the same, it more or less worked. And even after he closed it, we had the 1980s, we had at least part of the Clinton years, it seems like we had a pretty good run. So, are you throwing the baby out with the bathwater?
Well, it's a fair question. So I think peak America was 1946 after we'd won World War II, right? And then we had a lot of inflation to pay for World War II, by the way. But the 50s, 60s, 70s, they were pretty good times inflation-wise and in terms of health and growth of America. As you say, incomes went up and GDP went up. 71 was quite an inflationary decade. It was very tough for a lot of people, that inflation, but we made it through it. And then what Volcker did when he raised rates in 80 was he really he enabled another breath to come into the fiat system. It made the 80s look pretty good because inflation was coming down, and Reagan figured out that if you use debt to generate growth, and I remember everyone screaming about the Reagan deficits and how large they were, and of course they're quaint by today's standards. But there was a lot of GDP growth during the Reagan presidency, and arguably it was even a smart thing to do because it led to a buildup of our military, which then led to the collapse of the Soviet Union, which was a good thing. So, all of that was fine. And then when China came online in 2000, started giving us good, cheap goods and services, that created more deflation. So a lot of the deflation was kind of masked in those 80s and 90s, but it was there. The money supply was growing at 7% a year. And in fact, what I think is going on now, what COVID really did, we had kind of a long-term deflationary trend, which is a natural thing. Naturally, and the book talks about this extensively, and this is the problem with Keynes and Keynesians, they think you have to have inflation to have a healthy economy, which is just not true. A healthy economy is productive and things will get cheaper over time. That's the way it should be. That's the way it was in the 1800s. That's what we want. And so all the technology that we had has created or brought to us a certain measure of deflation. The problem with that is that all the financial actors lever the system up. And so the system needs inflation to continue. This is Stein's law, where you're growing the debt faster than the GDP. And the only way to balance it is to print more money, or else the whole thing collapses. And it's that money printing, Tom, that's caused the enormous pain that the middle class has felt, in my opinion. And the book talks about this in great depth.
My friends, we're all on the spectrum, the risk spectrum, that is. Some of us play it safe while others are ready to bet half their income on red on a Las Vegas roulette wheel. But I am willing to take some risks in exchange for being able to live on my own terms. For still others, even the prospect of not receiving a regular paycheck from an employer is too much to bear. There's no right or wrong here. It's a matter of what you're comfortable with. And that's why the franchise option can be a happy medium between the extremes. Yes, you're going out on your own, but you're not entirely on your own. With a franchise, you've got existing branding, existing products and services, and existing formulas all ready to go for you. A friend I know from the libertarian world has set up a system that you can use to narrow down all the franchise possibilities out there to one that will work best for you, given your goals and interests. He's just published a free guide to franchising that is well worth the read. Get your free copy at tomwoods.com/franchise. Well, of course, I have a little bit of familiarity with what happened in 2008 because I wrote a book on that.
Right.
And that was another case of the vindication of Ron Paul.
Absolutely.
He gave a speech on the House floor in 2001, and he said, they're trying to wind down this .com bubble by replacing it with a real estate bubble, and that's going to cause a lot of problems. That was exactly what they did.
Yes,
that was exactly what they did.
Yeah, Greenspan took rates down to 1%, and I recall very clearly Greenspan saying people should tap their home equity.
Yeah.
They should take out HELOC loans, even if they're floating. It was just the height of irresponsibility. The notion that we should have 12 mandarins in Washington, D.C., setting the most important price in the world, which is the price of capital, the price of money. Our kids are going to look at that and think, that we were this is like bloodletters in the Middle Ages. What the hell are we thinking? This makes no sense. The price of money should be the balanced price between savings and investment opportunities, full stop. And it should be set by the market. The Fed, even if the Fed was omniscient and not political, both of which are not true, they couldn't do it. It's impossible. The only way to get the price right is to let the market set it. Price fixing just doesn't work. Lots of history proves that.
Now, since you are, you look at the markets every single day, and you've been doing that for 40 plus years.
Yeah.
What's different now? Let's say what's different in 2025 about what your strategy is, what what you see going on as compared to, say, 1985?
Well, a lot of things are different. I mean, back then we had productive growth and we had, a much lower debt to GDP ratio, and the credit was really starting to work well. The biggest thing that's happened right now, Tom, is that the monetary system became really untethered. When we went to 0% interest rates, and not just 0% interest rates during the time of the crisis, but 0% interest rates from 2009 all the way to 2015, and then again throughout COVID. I mean, that was just an enormous distortion of capitalism. And so what I think is going on now is we're in the grips of a sovereign debt crisis. And first of all, they helped to blow the dot-com bubble, and that's a long story in and of itself, and I tell it in the book. Then they helped to blow the 2008, GFC bubble, and that's a big thing as well. Then now we're in the everything bubble, where the COVID excesses of spending and debt basically took, every price up to a ridiculous level. I mean, the stock market has never been more overvalued on many metrics. And so, to me, this is a bubble that someday will burst, has not burst yet. We can talk about timing. But when it does, there's no higher level. I mean, it's not like Deus Ex Machina. We're going to get somebody from Mars to come down and let us build a bigger bubble. When this bubble bursts, the currency goes with it. And that's why, in my opinion, it's so critical for investors, and the book talks about this. I mean, basically to protect themselves by having and owning things that the government can't print. Because the mathematics, just the simple mathematics, not politics, not my opinion, just math, suggests that if they do not continue to grow the underlying base money supply at a faster rate, the whole damn thing is going to collapse. And one thing we know is that faced with collapse versus inflation, they will always pick inflation. We've seen it.
But in terms of price inflation, which became an issue under Joe Biden, and that I think some of us thought would become an issue sooner than that, but it did become an issue. What their excuse or their talking point for that would be, as time went on, the rate of inflation began to decline. And they would say, look, we're making great progress against a problem that we didn't have before we were here. We're making great progress.
It used to be transitory, the good ship transitory, right?
Right, yeah, transitory. Yeah, that was Paul Krugman's word. But then it turned out it wasn't transitory. It was a big problem. But now the outlook, I think, is it's still higher than we want, but the worst seems to be behind us. It's cooling off. And you don't seem to have that same confidence. Now, let me add to that, that Trump's strategy is, because they can never talk about the money. I mean, you're right. As good as Trump's people have been on a lot of things, they can't talk about the money because that's too fundamental. So it has to be things like, well, we'll attack it on the supply side. We'll increase supply by boosting American energy, which will increase our production, which will push prices down. What do you think about all that?
Well, I'm all for it. Look, I'm all for boosting supply.
Yeah, there's nothing wrong with that.
Yeah, right. I'm all for increased productivity. I'm all for decreased regulation. I mean, Bessent is the new Treasury Secretary. He's a very smart guy, and he's going to do a lot of things that will help. I mean, I think the question we have to ask ourselves is what condition is the patient in? And I think the patient is, and maybe I'm being too extreme here, but I think the patient is pretty damn critical. And that, Elon and can come in and talk about all the things that Doge can do. But if you really dissect it carefully, there's only so much they can do, unless they really want to take a hammer and a hatchet to, the entitlements and the defense budget. So, the inflation problem, and they say it's coming down, and it is. But the other problem is, Tom, as you know, the book talks about this. There's a big chart in the area on it. Inflation numbers really aren't accurate. I mean, I don't think most people think we're back to 2 or 3% inflation. I know I don't feel that way. I mean, I just saw my homeowner's insurance go up 100%. My car went up 30%. I mean, last year, agricultural prices went up 20%. Here's another example. The longshore workers, longshoremen who unload the boats, they went out in the fall in October and on strike. They got a 6-year, 60% price bump, 10% a year for 6 years. Now, hang on a second. How does that foot with the Fed telling us that we've got a 2 or a 3% inflation rate? I mean, what I would suggest to you is that the Fed is kind of dreaming, and there's a lot of gaslighting and propaganda. And I think we entered an inflationary period with COVID, and history shows that it's very hard to put that back in the can. I mean, I think this decade will look much like the 70s, where we will have, sure, there will occasionally they'll tighten and things will get, money supply will slow and the inflation will seem to wane a bit. but then, the next wave will come and it'll go higher than the prior wave. And so, I think what will drive the next wave is stock market will sell off, unemployment will start to rise. The government will decide to be aggressive at fighting that. They'll take rates down. They'll maybe go back to QE, and we'll be in a situation where the money supply is growing again. And we know the money supply, generally speaking, depends on a few things, but generally speaking, leads to inflation. So that's coming, in my view. And the other problem they've got is just this fiscal thing is such a mess. I mean, the first 2 months of fiscal calendar, or this most recent calendar fiscal year for November, December, expenses, the deficit went up 60% over last year. I mean, one of the things that happened with COVID and there's a chart on this in the book, is that the government spending went up a lot during COVID. Okay, I get it. It's a crisis. You got to increase your spending. The thing is, it didn't go back down. The crisis is over and it's stayed high. In fact, it's grown. And so, you've got a government that really kind of thinks they can just promise everything to everybody and that it's cost-free. And, it may appear to be cost-free from a, things keep running standpoint, but it's not cost-free if you have to print the money to pay for it, and then the cost of everything we buy goes up. So we're all paying for it. We're just paying for it because, things are more expensive. I mean, I just bought, a couple of hamburger patties. This blew my mind. A very good quality meat, I'll admit, but, it's a pound, about 2 hamburger patties, half pound each. It's $11. I was like, really? What's that all about? The things are expensive.
You, for I think as long as I've known you, you've been interested in this theory with a book of the same name called The Fourth Turning.
Yeah.
And you make reference to it in this manuscript. Can you explain to people who've never heard of that?
Sure.
What that is and how it's relevant to your story?
Yeah, it's very relevant. I think it's a great book. It's called The Fourth Turning. It's by Howe and Strauss. It's a theory of social development. And what they posit is that, generations have problems that they solve, and that societies get set up in a certain way, and they go through a birth period, a maturing period, and then ultimately they hit a wall and a decay period, and then all the rules have to change. And so I think we're in a fourth turning right now where the rules are going to change surrounding money. These fourth turnings tend to be 4 generations. Each generation is 20 years apart, 20 years long. They tend to be about 80 years apart. So the one prior to this was the World War II, and this is what led to the hero generation, basically saved the world, in that fourth turning. The one prior to that was the Civil War. And of course, that ended slavery and united the country in a lot of ways. And the one before that was the American Revolution. And so I think we're in one of those. I think that's why you're seeing so much political strife, and it's been so hard for so many people. And I think, we're going to resolve it because the money is what's broken, and the money is kind of failing, and it's going to get fixed. And one of the other things I talk a lot about in the book that is very hopeful, in my opinion, Tom, is that, we grew a society that was peak centralized. I mean, we started off as a bunch of nations of farmers in the 1800s, and then the Industrial Revolution hit, and we decided and we figured out that by using scale, we could do things cheaper. Henry Ford invents the automobile and the assembly line and big steel factory. And so by getting things big, we all got better, things got better off. Well, in my opinion, World War II, we hit the peak of scale. We hit the point where we have diseconomies of large scale, because what happened is, the large scale country called Germany got taken over by a madman. He started a war that killed 40 or 50 million people. So there's a diseconomy to large scale. And I think after that, and I talk about this a lot in the book, after that, we started decentralizing. And the trend toward decentralization that's taking place right now, really driven by the internet and the microprocessor, it's going to save humanity, in my view. And, so we had 3 big networks. They could lie to us, and they did. Now we've got you, and we've got Tucker, and we've got Rogan, and we've got, the internet. And, guess what? The centralized, corrupt powers that be that benefit from the scale, they're getting disintermediated by the rest of us who know the truth. and that's a really good thing. And by the way, the exact same thing is happening with money. I mean, money used to be controlled by the Fed. It used to be controlled by the banks. We've now, and gold was an alternative system that was outside the system, but they managed to kind of neuter it pretty well. And we've got a new decentralized form of money in Bitcoin that they can't control, where the rules are fair. And it's an amazing invention. I mean, Bitcoin is just an amazing. It's like when we invented air flight. I mean, there will be pre-Bitcoin and post-Bitcoin, because for 1,000 years, every single form of money in existence has been diluted, even gold. In 50 years from now, we'll have twice as much gold on the planet. It grows at 1.7% a year. We know the exact number of Bitcoin that there will always be from now until the end of time. So that's a very powerful concept that we hadn't dealt with before, and that has huge, huge investment implications. I mean, if you read my book, the first half will depress you. You'll see examples of all the bad stuff and how broken it all is. And the second half will get you really excited, because there's a really positive trend and a hopeful outcome that we're going towards. And by the way, everybody's got a part, everyone has a fair chance to participate in it. And that's why, I really hope, my goal for this thing, Tom, is to have average people understand what's happened to them, and then understand how to protect themselves and what to do on a go-forward basis. And, my very immodest dream is that this becomes, common sense for money. Very, very much the same way Tom's pamphlet helped people understand why it made sense to break with the British. I hope this makes people understand why it makes sense to have a decentralized form of money based upon mathematics, which is really what Bitcoin is.
Hey everybody, your old friend Woods is about to save you a bundle. I'd like to tell you about my friends at Federated Computer, who are changing the way businesses buy software. We all need software to run our businesses, but the best business software doesn't have to cost thousands of dollars each month. The typical Federated Computer customer saves 75% or more on their software bill and gets great software, top-notch customer service and support, and a software solution that is uniquely installed for your business and without any surveillance or breaches of privacy. For example, if you use Google for email, Salesforce for CRM, Slack for team chat, ListMonkey for customer communications, and Airtable for data management, with a team of 10, you'd save $9,000 per year on software costs switching to Federated Computer. And what is wild, the cost of Federated Computer doesn't grow as your team grows. You can use your Federated Computer savings to grow your business rather than feed the woke Silicon Valley software companies. The Federated Computer team invented computing in the cloud. Now they're taking a hammer to the ridiculously high prices of business software and have many, many satisfied customers to prove they deliver. Federated Computer has been a longtime supporter of the Tom Woods Show, and they're offering 30% off their already low prices when you use coupon code WOODS. Go to www.federated.computer to begin to save 75% or more on your monthly software costs. That's www.federated.computer. These folks are going to do you a big, big favor. Check them out. Well, between where we are now and where you'd like to be, we don't know how much time there is. So
right.
What would you be doing? Again, we have to be careful. This is not investment advice. It's just ridiculous. I hate that I have to treat my listeners like they're 7 years old.
Yeah, right.
Because of these requirements. But, what would you or the ordinary person even be doing to navigate this crazy environment until relief comes?
Yeah, I think learning about the problem. Obviously this is very self-serving, but it's surprising. You've written books since you know the math. You don't really make much money selling books, and I'm giving some away, and I don't really care much about what I make. I would say read my damn book. I think it's a pretty good explanation of the problem and how to solve it. As I said earlier, one piece of advice I give to everyone I speak to is you need to own things the government can't print, because this government printing problem is there and it's ubiquitous and it's only going to get worse. And don't get me wrong. They're going to try. They're trying now to fix it, and I applaud the trying, but I think it's too far gone. That's at least my estimation. We can talk about timeframes too, Tom. By the way, I was terribly wrong. I thought all this was going to happen in 2008. Okay. And so here we are, 16 years later.
Yeah.
And so there are many who say, hey, Larry, you're wrong. They're going to kick the can for another 20, 30 years. Maybe, but if you look at the book and you look at some of the historical facts, there's a great Hirschman schedule in there that shows that when countries hit the 130% debt to GDP level, which is where we're at now, something happens. The U.S. is like the family that is taking out credit cards and using the new line of credit to pay the minimums on the prior ones. and eventually, somebody's just going to stop giving them credit cards. That's kind of the U.S. And the bond market is going to stop giving Uncle Sam money. In fact, it already kind of has. I mean, no foreign buyers. There have been net foreign sales of bonds since 2014, 15, 16. So, the world is kind of figuring it out. And by the way, the other big clue that what I'm saying is correct, and again in the book, is, okay, so if everything's so hunky-dory with the government, the economy, and everything that's going on, why is gold at a record price? Why is Bitcoin at a record price? I mean, to me, those are very loud canaries in this coal mine saying, hey, you know what? Something's wrong with the money. I mean, people are buying these too. I mean, I'm sure you saw the Costco stories of how when they get in, they sell gold bars in Costco. And every time they get a shipment in, they sell it really quickly. And people are figuring it out. Not everybody, but people are figuring it out.
I want to first of all say that so the book is called The Big Print. I want to say, I know there are a lot of people listening who think I pretty much know this story. I read Rothbard. I don't need to look at this. But Rothbard is giving you the some history and the theoretical background. Larry is taking you through the details of what happened, like filling out the history. He's going at it also with the insight of an investor who's going to have an angle on this that our theoreticians don't have. And the thoroughness and the storytelling of this thing, it includes everything. It's got the 2008 bailouts. It's got the problems with that. It's got Silicon Valley Bank, which was just a year and a half ago, basically.
Yeah, right.
Stuff that Rothbard was dead before that. There's no way you can get that. It's everything.
Yeah, thank you, Tom. And I stand on the shoulders of giants, right? I mean,
let me say on your behalf there that Larry's acknowledgments page is like a full page of just names. So he's very, very happy to admit where he learns things.
And you're in there, Tom. I mean, look, so everybody has a role in life, right? And I'm not some genius, but I'm pretty good at assembling facts and maybe explaining them. I do think I have a strength in that area. And so what I've tried to do is kind of make this the Reader's Digest best version of sound money and why it's important. You know what I mean? That's kind of what I tried to write. And I tested it on my wife, who helped me write a few of the chapters. And I just wanted it to be, look, everyone in libertarian circles knows this. Probably a lot of your listeners already know this is old school. I mean, you've read all the Austrians. You know why Keynes is flawed, blah, 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 blah. That's not who we're going after, folks. If we really want to win this thing, as Lou Rockwell said, and I quoted him in there, we've got to educate everybody. And so we got to write, I felt like you got to try and write a book, Larry, that gets to everybody. Somebody who doesn't know about this stuff, somebody who doesn't care about this stuff, but explains it in a way they understand it and cites enough examples that they go, oh my God, this is awful. I am really pissed off. I mean, when they learn that, Wendy Graham was on, the wife of Phil Graham was on the board of Enron, was getting paid, $1 million a year. And Phil was changing the commodities rules so that Enron could, lever themselves up and blow up $84 billion of capital. They're going to say, oh, I see. This is pretty corrupt. Or when they look at, the case at Morgan Stanley, where the president of Morgan Stanley's wife was able to borrow $220 million non-recourse from the Federal Reserve during the 2008 financial crisis. I mean, you and I couldn't do that, Tom. It's just it's outrageous how bad and how the criminality that's taken place in the financial sector. Take the Silicon Valley Bank case. I mean, the depositors there should have taken a haircut. That's what Dodd-Frank said. It was black letter law. And yet Bill Ackman, multi-billionaire, Harvard Business School grad who lives in New York City, who's obviously had big deposits at Silicon Valley Bank, could get on Twitter and get on the TV and say, hey, if we let this thing fail, the entire banking system's going down. And, just him saying that added to the fear. And then, of course, they had to bail it out, right? And that's not what they should have done. They should have let it fail. It was a mismanaged bank. The people who mismanaged it should have paid the price. Or the people who had their money on deposit there should have paid the price. But no, they can't do that. The insiders, the financial elite and the insiders change the rules in their own favor. And that's how, all these billionaires who've made all these money, they've been playing with a rigged deck. And, Joe truck driver and, Sally waitress, I mean, they don't stand a chance. I mean, there's not even a chance. It's horrible. It's just absolutely horrible how unfair it is. And that's, that was part of the impetus to write the book. I mean, I really feel like I can understand and see what's going on. And it's like, somebody's got to call these folks out on this shit. You know what I mean? So, I mean, there are going to be some people who are going to read this book on the inside. If they get to it, maybe they won't. They probably ignore it, but they're not going to like what they see.
But yet, maybe one of the central ideas that somebody walks away with after reading the big print is that there's no interest that the state has in limiting its access to the creation of money. It wants to be able to be on the receiving end of the new money.
Oh, yeah.
So we are up against, we think Elon Musk is up against a lot of enemies in going after, that there are too many employees at such and such federal agency. That is nothing compared to going at the heart of the whole beast. So what's a plausible scenario by which this does unfold, do you think?
Well, that's so you're absolutely right, Tom. And yet, I think actually I had a quote in there from Ron Paul who said it. They sow the seeds of their own destruction, because what they're doing is they're trying to use printing money to solve the problem and keep the printing at just the right rate where it's just enough to keep it going, but not so much to create hyperinflation. The problem is that if you sit down with a calculator and you do compound math, what you see is that, if you grow something in a compound fashion for a long period of time, eventually the line goes asymptotic, goes straight up. And so what's going on here is the math is catching up with them. And, we're going to take the car keys out of their hands because either they're going to do a financial and monetary reset, which is what I think the smart thing to do would be, and it would be the least painful and the most fair way of dealing with this, or they're going to drive the car into the hyperinflation ditch. And, I know that sounds extreme, and I hope we don't go there, but, I'll give you a scenario where it could happen. So Team Red does the best they can, but we don't solve the problem. And so in 4 years, Team Blue wins, sadly, right? And Team Blue says, hey, you know what, Andrew Yang, you're going to be VP or president now. We're going to do universal basic income. And Stephanie Kelton, you're going to be the Treasury Secretary. And, modern monetary theory is going to be put into place. And, we don't have to worry about running out of money. We can always just print it. And guess what? We're going to have hyperinflation if that happens. And the dollar is going to completely fail. And you're going to have a scenario that looks like, the Mandibles. I don't know if it's a book you've read, but it's a book I reference, which is a very interesting novel talking about, failure of the currency in the United States, theoretically. And, that will then lead to, okay, everyone will be so fed up with it. And they'll say, we've got to return to a sound money standard. And then let me say another thing. It's a good thing. Hyperinflations are obviously a terrible thing. But on the other side of, and I've studied and read about all of them. And on the other side of hyperinflation, when what's broken here is the money. When you return to sound money, people organize. Most people in the world just want to get up and do their job, raise their family, love one another, and not kill their neighbor. The average human is a good soul. The problem is we're run by, the people who go into these positions of power. A lot of them are psychopaths, and they crave money and they crave power. And if we go back to a sound money standard, we will self-organize and things will be pretty damn good, in my opinion. There's always the risk that there's a lot of leftover anger, and that post, the 1923 inflation in Germany, that's what led to Hitler, demonizing the Jews and getting the power that he got. But I think that the odds are better than that. That what will happen is if we do have a hyperinflation, sound money, politicians and others will emerge and go, the reason this thing got broken is the Keynesian thought patterns that we were operating under, and we have to return to a form of sound money. It will do that, and we'll have a first turning, and things will be much, much better. So I'm quite optimistic about where we're going. But I want it to happen sooner rather than later, because I want to be around to see it, and I want my 20-year-old kids to benefit from it, because they're struggling, because the odds of them buying a house right now are kind of zero, even though they're all doing pretty well.
Yeah. Yeah, no, I hear that. I feel like, I kind of believe in, I don't know where I got this idea from, but as soon as I heard it, I realized it made sense. The idea that maybe it doesn't make sense to wait until you die to help out your kids. I help them out all the time anyway. But yeah. Like in a big way, like with a down payment on a house.
Yeah.
Do it now.
Yeah.
No?
Yeah. No, it's not entirely crazy. I mean, it's a balance because I want them to have the fear and learn the lessons that I learned from being badass broke in the early days. I mean, it'll focus you like nothing else. But you're right. I mean, I don't see any reason in letting your family suffer, and your money, you can't take it with you. And I mean, the thing I'm pretty liberal about is spending money on experiences and vacations and time with my kids, because you just never get that back. And as I look back over my life, that's the best money I ever spent. Every single vacation we ever did was just, I mean, we all laugh about them. You can't forget them, and it's worth every single penny. And it is a cliche. I'm 67. It is a cliche, but damn, they grow up fast, and I miss them. No,
that's exactly how I feel, and we certainly do plenty of travel.
Yeah.
Now, I have some money in your fund.
Yes.
And so, I put it there because, and this might sound naive to some people, but I've known you a while. I know how smart you are. I trust you. I know you have a great track record. And so I put it there. And I've had, I can't say I'm unhappy with the results. But I'm curious to know then, I know that the way you run that fund is not hermetically sealed, different from how you view the world. That the kinds of things you're saying in your book are in some ways guiding you as you operate, as you manage this fund.
Correct.
So what would be some of those guiding ideas?
Well, really the biggest one probably, Tom, and we talked about this when you were looking at making the investment, is we look for asymmetric bets. In the investment world, any investment you make can work out or not work out. One of the things I always ask anything I'm looking at, I try and model in my head when I make an investment, what can go wrong? What assumptions do I have that are not likely to be true that could cause this to go wrong? And because there's always something that can go wrong. Even with Bitcoin, there are risks and things that can go wrong. Talk about those in the book. I don't think they're substantial, but they're there. And so, but if you look at investing in what I consider to be the right way, what you do is you say to yourself, okay, I can only lose 1x what I put up. And I'm going to spread my bets around. I'm not going to put everything in one basket, obviously. And I want to find situations where if I'm right, I'm going to make 2, 3, 5, 7, 10x. And that's called asymmetry, right? Because occasionally you will not be right. That's just the law of nature says you can't get every choice correct. But if on the ones you're wrong, you lose 1, and the ones you're right, you make 5, well, you make up for the one you lost. And so, 5 times your money on the good one, or 2 times, or some of them you just break even, but it's better than losing money. And so that's kind of the model that I've generally worked under. And it's been a very good model over the years. But, as even there are years when it doesn't work, and one has to take a long-term perspective. I mean, one thing I am not at all is a short-term player or a trader. I mean, I look at money as capital that's to be protected over 3 to 5 year to 10-year timeframes. And if I'm correct, and I have been mostly, it'll work. But you could come at me in any given year, and I've had years where I'm down 20%, and that really sucks. And I've had people with a short-term mindset who, when that happens, they get very upset. And usually I say, okay, fine, well, let's unwind it. But so that's kind of that's the underlying premise that I'm working with. And then, the bigger premise that I started with in 2008, I mean, prior to 2008, I was a venture capitalist doing all kinds of technology things, and my biggest success was in the internet and that area. In 2008, what happened, when they did what they did in 2008, I mean, I don't think the average American, especially younger Americans, don't realize how big a deal it was what they did. I mean, they just changed the entire monetary framework. When they took rates to zero and they grew, the balance sheet, the Fed balance sheet, from 900 billion to 3 trillion. And, one of the great quotes is remember when Ron Paul was questioning Ben Bernanke, and the Fed balance sheet was at 1.3 trillion. And Ron Paul was questioning him in the congressional testimony and asking him, hey, when's this thing going back to 800 or 900? And Bernanke said, oh, very soon. Don't worry about it. It's going back to 800 or 900. Of course, well, it did. It went as high as 9 trillion. So the whole notion that the 1.4, 1.3 was going to go back to 800 kind of didn't happen. And that's the problem. Once you start down this money printing path, it's like alcoholism. You got to keep drinking more and more to get the same high. So it's really quite a pernicious thing. And but it's a little difficult to know when it's going to end. I mean, my gut tells me that this whole monetary event that we're in right now, and we're definitely in it because like I say, gold's at record highs and Bitcoin's almost at record highs. I think this will all get resolved by the early 2030s. So that gives us another 5 or 6 years of turmoil that I think is going to lead to returning to a sound money standard. We're either going to do it in an intelligent and structured way, which, Scott Bessent gives me some hope he might understand that, or we're going to do it in a messy way where, we're going to have really high inflation until we get some politicians in there that can return us to sound money. But, it's encouraging, Tom, that there are more politicians coming along. I mean, Ron Paul used to be literally the only lonely voice in this fight. And now you've got Thomas Massey, you've got this Warren Davidson, who's a representative out of Ohio. I was just listening to, you've got Senator Lummis, RFK, the speech that RFK gave at the Bitcoin conference, certainly indicated that he fully understands the value of sound money. Trump himself has said, he believes in the gold standard. I'm not 100% sure he really knows what he's saying, but there will be as the problem becomes more acute, there will be a greater movement in this direction. And again, the book is written to try to educate people so that when they go to the polling booth and when they look at politicians, they start asking the monetary questions, because actually the monetary questions are as important as any other question out there regarding the quality of their lives. I mean, like I said, I wrote the book because I saw blue and red fighting over stuff that, in my opinion, did not matter as much as the money. And we've got to get the money right if we want to get a healthy, growing, productive society that's fair, where young people can, earn a fair wage and buy a house, and all of it. It's just the system right now is badly, badly broken, in my opinion.
Well, I'd like to close here and give people an opportunity to get the book, but at the same time, I want to emphasize again, I know we feel like, I kind of know the general contours of the story, but the full story is worse than you think, and more sinister than you think, and more stupid than you think.
Yeah.
I think sometimes, Larry, these people can fool even our people because they sound sophisticated and they have fancy degrees, and maybe there's some instinct of yours that thinks in the back of your head, well, they must know something. I mean, at least they must be going on some playbook somewhere.
Absolutely.
No.
No, yeah. I mean, it's kind of like the COVID thing. I mean, in some ways, Keynesianism is like a mass delusion. I'm just like, what part of this? I mean, and which is very interesting to me too, because a lot of, I explain sound money to, blue collar people that are friendly with me, and they get it instantly. The more sophisticated you are, the more oh, well, they had to bail out the banks in 2008. If they hadn't, the ATMs wouldn't have worked. I mean, there's a whole line of reasoning. I mean, I don't know, in the book, I hope you like the chapter where I talk about how the Keynesians have more or less kind of bought the entire economics profession. You want to get a PhD in economics, you better not be an Austrian. The only place that supports any kind of Austrian thought, is about Mises Institute and George Mason University. Other than that, there's just nothing. It's all Keynes.
But what's really interesting, though, Larry, is that even if they're not Keynesians necessarily, they're just, neoclassical economists or something. Well, the key thing is we've had a couple of papers written on how much the Fed funds the economics profession. How many papers were funded by some Fed grant? How many professors have been in one way or another on the take? And it is an astronomical percentage.
Oh, yeah.
They're not going to bite the hand that feeds them.
Of course, that's in the book. Yeah, no, it's outrageous. It's just totally outrageous. And again, it's, we see this mirrored in other areas, though. This is how big food and big pharma and big military industrial complex, they've all sold us a narrative that benefits their interests, and it makes them rich, but it bleeds the rest of us dry. That's we eat the wrong stuff because Ansel Keynes, at Harvard, was paid by the food companies to create the upside down food pyramid where we'd all eat carbs and not meat. And it goes on and on and on, Tom. And you know this, and I'm sure most of your listeners know this. And the only part I can't add anything to those discussions because that's not my area of expertise. But having been an investor, having studied economics, having watched this stuff unfold over 40 odd years, I do feel qualified to talk about the monetary stuff. And I remember where the bones are buried. And that was the other reason for writing the book. I felt like somebody's got to put this down on paper because it's an amazing story that the average person just doesn't understand, because they weren't here to see it happen. I deal with a lot of Bitcoiners, and they're pretty funny because I get these young Bitcoiners. I love them because they're going to charge up the hill and kill the king. They want to, slay fiat currency, but they act like they invented the idea of sound money. I'm kind of like, hello guys, you didn't invent this. Ron Paul, Barry Goldwater was a gold bug. There've been a lot of sound money people in this country who have fought for years and years. John Exeter, just the list goes on and on and on. And, Bitcoin's just the most recent manifestation of it. But we've always been, Don Quixote, off in the wilderness, kind of tilting at this fiat windmill. But the good news is, this Bitcoin thing, this is a really sharp spear, and we got them worried. And I think we're gonna run them over. I think fiat's just reached its due date. They overplayed their hand. Just in the same way that look at what the Democrats did the last 4 years. They really overplayed their hand, and everybody just woke up and said, we're not doing that anymore. And that's what's going to happen with fiat. It's like, no, we get it. Yeah, we understand that. No, I'm not dealing in fiat anymore. I want sound money.
Well, that is an outcome very much to be desired. So,
amen.
Yeah. So the book, once again, The Big Print: What Happened to America and How Sound Money Will Fix It. I'll link to it at tomwoods.com.
It's available on Amazon. Just so people know, I don't have Audible out yet. It's being read right now. It should be out very soon. The hardcover, paperback, and Kindle versions are all out. I do go to trade shows. I'm happy to sign books at the trade shows. Maybe eventually I'll have a website and I'll offer signed copies, but I'm at most of the Bitcoin conferences these days. And I love meeting with people who are, sound money advocates because we're all in this together.
Well, I would say, even though I've written a book with many charts and I just describe them in the audiobook version, this is a book I think it's best to have in your physical hands.
Yeah, the charts help a lot because the pictures are pretty compelling in a certain way. So,
yeah. So I'd recommend that. So tomwoods.com/2609. I'll link to I'll have Amazon link and wherever you want to get it.
I appreciate that.
And also in the video description. Well, great to talk to you, Larry. And,
likewise,
this is a great book.
Oh, thank you very much. I appreciate it. It means a lot coming from you. I have enormous respect for you, all you've done, your book, the show, etc. So I just, we're all in this battle together. And when we win it, sometime in the next 5 or 10 years, let's have a big party somewhere.
Yeah, absolutely. Well, and I've had nothing but respect for you over the years, and that respect has grown as your fund has made me money. So I appreciate that. Thanks again, Larry.
Take care. We'll see you. Bye.
And thank you, ladies and gentlemen.
Make yourself and those you love less vulnerable to the regime, both mentally and physically. Get more forbidden information at tomsfreebooks.com and be sure to subscribe to the show wherever you listen. See you next time.
Like the sound of The Tom Woods Show? My audio production is provided by Podsworth Media. Check them out at podsworth.com.